So with Trump coming into office in exactly a week from now, crypto, especially Bitcoin, is showing a typical manipulation setup that happened when Trump actually got elected a few months ago. Now, this is the exact same setup that brought Bitcoin from $60,000 to 100K in the span of a few short weeks. And I have a feeling that the market is setting up, at least price action wise, to perform the same move after Trump gets elected. So in this video, I'm going to break down the exact scenarios that I'm expecting for the Trump inauguration. I'm going to break down my exact setup. And before we get into the video, guys, in 3 days, we have a free masterclass. Not going to get too much into it, but it's going to be a lot of value. It's going to set you up for 2025. Last time we ran one of these, we quite literally hit over capacity. Right now, there are still a couple hundred spots left. If you want to find out more about this, link below. Otherwise, let's get straight into the video. So guys, just to kick things off, we're going to take a look at that election setup that I talked about from before, just to show you that I'm not pulling the stuff out of thin air. Like essentially, Bitcoin has spent the majority of last year in an extended consolidation. And of course, when Trump's election, or rather the election campaign, started kicking off in earnest, starting from September, October, Bitcoin did a run from 55K to about 70K, which is nothing mind-blowing, right? This is just a normal move for Bitcoin. And you can see the explosive move on Bitcoin happened after Trump's election. Now, here's the beautiful part about all of this, and why I say a lot of the price action that we're seeing now is very manipulative and very reminiscent of what happened on Bitcoin back then during his election, which is, if you take a look, this is 1 week prior to Trump's election. Bitcoin did a flash pump from like 65K to 75K. Now, Bitcoin, this is a pretty big move, but what comes after is the most like eye-opening moment of all, which is this is exactly 1 week before the election results got announced. This is the day that the election results got announced and Trump won, of course. Prior to that, check it out. Price actually dumped by a lot, right? To shake out a lot of people before eventually filling in the demand zone. Now, I call this in the alpha group, so I'm not just like looking at this in retrospect and be like, hey, you know, look at me, I'm so smart. I actually predicted this. And it's not even that I predicted this, it's just something that's present on price action. And a lot of the times, these news events, especially, for example, like Trump's inauguration or, you know, X country selling their Bitcoin or whatever, all of these news events tend to be priced in before the release of the news event itself. The more you understand about the markets, the more you understand that the media outlets, the news outlets, they're all controlled by the large players. For example, BlackRock owns a significant share of the traditional media outlets, BBC, CNN, whatever, and they get to control the narrative. And these news events just end up being an excuse, or rather a reason, a rationalization for the normies to be like, oh, Bitcoin pumped because Trump got elected. But the more you understand price action and the nature of financial markets, the more you understand like it's manipulated. And this right here is a classic demand zone. So this is a drop, right? An aggressive drop. And then you have an indecisive candle followed by an aggressive pump. This is your classic drop base rally. So this is a demand zone. Price prior, like quite literally, came back to the 50% line of that demand zone. And the moment Trump got elected, boom, right? You take off. Now, how is this similar to price action that's currently happening right now? Well, it's the scenario that I painted out, quite a few weeks ago, but it hasn't quite hit yet. Now, there were certain signs and there were a few moments where, Bitcoin actually tried to break above the value area over here, which is essentially just the range where prices transacted the most volume on. If you can see on the right-hand side here, you can see that's the value area. This is where most of the trading volume has been concentrated at. All this tells you is that a lot of traders, both buyers and sellers, agree that this is a good area to transact in. And all of that does not really matter other than one thing, which is any deviations outside of the value area. If it's above, this means that price is in a premium opportunity. And if it deviates below the value area, this means price is in a discount opportunity. Now, if you know anything about the financial markets, it's that you want to buy low and sell high. So ideally, you want to be buying in a discount and not in a premium. We're about to get that opportunity, I believe, because in this next week, this is super key. I expect there to be a lot of volatility on Bitcoin, especially towards the downside, but this is going to be the false move. Because if you take a look here, there was a lot of volatility towards the upside into the premium zone. Now, in the previous video that I made on Bitcoin, I said that there were only two possibilities that could happen when you deviate outside of the value area. First of which is just a deviation. Price eventually accepts back into the value area and it will, oscillate back to the value area low. Now, second scenario would be that price successfully breaks out of it and finds, the value area high as previous resistance turn into support level and price just continues going up. Well, same thing here. you're currently at the value area low. And given the fact that we are expecting a sweep below the value area low, why? Because right here, if you see these two dollar signs here, that is liquidity levels. In fact, I'm even going to remove this right now because if you take a look at this blue box right here, this is a fair value gap on the weekly chart, right? This is a fair value gap, which is an imbalance in price that has yet to be filled for quite literally 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. And heading into next week, that's going to make it 10 weeks. So the demand zone that we talked about before is just an example of some kind of PD array, which is some kind of high probability key level. Now, there are a lot of these types of key levels. You have fair value gaps, you have Fibonacci retracements back into the 0.618 or the 0.005. You have order blocks, you have liquidity sweeps, you have support resistance. All of these count as key levels. The thing that I really want to draw your attention to is like the narrative that is being built prior to price hitting those key levels, right? This is how you add confluence on top of your trades, which is if the timing adds up, if the news event adds up, if the key level adds up, if even the Fibonacci lines up, if everything lines up, that's a recipe for an A+ trade. Now, when you only have, like, for example, one confluence, which is here, price action trying to break out of the value area high. And if you want to predict whether or not price is going to flip the value area high and turn it into support, well, you really only have one factor over there playing in your favor, which is price action. But now, if Bitcoin were to retrace into this area right here, not only would we have price action, we would also have, a previous key level. We would also have a liquidity sweep. We would also have a news event. Basically, everything kind of lines up. I'm not saying that this makes it a 100% trade opportunity, because if there's one thing certain about the financial markets, it's that, it's always uncertain, right? You're always playing a game of probabilities. But as long as you are taking the high probability outcome over the lower probability one every time, that's how you win as a trader over the long run. And so again, we've established that this is a weekly fair value gap. It's an imbalance because there are a lot of orders within this area that are still open, that have yet to be filled. And most importantly, the moment we zoom into the daily chart, we can also see that there is a previous swing low here that has yet to be taken. This is a liquidity level. And besides that, you also have a sweep beneath the value area low, which we already know, right? This is a discount. Just like how a sweep above the value area high is going to be a premium opportunity for you to sell, this is a discount, right? Anything under the value area low, which is essentially this box here, is going to be a golden zone, right? Like a generational opportunity, if you want to call it that way, to get into Bitcoin very close to the bottom before price shoots up after Trump gets inaugurated. Again, just understand more about the psychology of this. This is the shakeout before the real move begins. This is the breakdown that gets everyone bearish, gets everyone fearful, gets everyone to panic sell at the bottom. And once everyone has been shaken out, boom, right? You go in the opposite direction. I'm sure you face this as well as a trader. So many moves happen where price is going to go up, but right before it goes up, it kind of like stops you out and then it goes up. And these are the tricks that the big players utilize to, again, shake the majority of people out before they put in the real move. Now, I'm not saying that they are the ones who move the market, but again, market psychology. So how is this setup going to look like? Well, first of all, the first level that I'm going to look at is 89,000. Why? This is the start of the fair value gap, and most importantly, this is the level of a liquidity sweep. So once price gets into this level, if you're not an aggressive trader, or if you're not an active trader who enjoys, once price has hit a certain level, you go into the chart and you monitor the price action to find an entry, then this is going to be a perfect level for you to just set a limit. At least this is what I'm doing. I can only speak for what I'm doing myself, but you must also anticipate that some kind of like volatile event or just some kind of black swan event will drive Bitcoin to do a quick wick down all the way to potentially 83,500. And I know this is very low for Bitcoin, but let me explain the thought process behind this level. So if we take a look at Bitcoin from when it started the pump, which is right at Trump's, election, all the way to the current all-time high, which is at 108,000. Within this range here, this daily fair value gap 0.5 sits at the 0.618 of this entire range. For those of you who know anything about Fibonacci retracements, that is your golden zone. That is the golden pocket. So again, we're just pairing some confluences together. Not only that, but you are below the weekly 0.5 of the fair value gap. But most importantly, this is your daily fair value gap right here from here, and that's the 0.5. So all in all, this is going to be a second very high probability level. Now, I do not expect price to go anywhere below 83,500 just because of the previous factors that we've explained. There is also a possibility that it could go all the way down to 80K. Now, I'm not counting on it, but it would be wise to, if you have spare capital available, like setting a cheeky limit there would also be a smart move, because that is an area where you could potentially catch a falling knife and just like, again, it's high probability. Bitcoin's unlikely to go much further than 80K. And the reason for that is because all of this would just invalidate the entire theory that, hey, we're still in, bullish price action. And if you're in bullish price action, usually PD arrays, right? Bullish PD arrays get respected and they, act as support levels. Just like how when you are in an uptrend, bearish PD arrays tend to not play such a big factor. For example, when we look at the move when Bitcoin started pumping out of 50K, you can see that there are a lot of, bearish fair value gaps all dotted around. You have even, bearish order blocks and whatnot, but all of these eventually just get broken through and they're not respected. Whereas when you're in an uptrend, you can expect most of the, for example, bullish fair value gaps, example right here, to get respected. Even liquidity sweeps present you with an opportunity to, again, get in when everyone else has been shaken out. This is known as a counterparty liquidity sweep within a trend. And again, that's your demand zone prior to when Trump, got elected. All of this just paints a picture like, hey, at least statistically speaking, this weekly fair value gap is very likely to fall in support. The only question is, how low will it go? And currently we have identified essentially two high probability levels. One is right here at 89,000 and the second will be somewhere around 83,500. Now there is also the likelihood that Bitcoin could stop at $85,000 sharp. This is a psychological level and also exactly the 0.5 of the weekly fair value gap. But either way, these three levels, if you were a passive trader, at least this is just what I'm doing. Just going to set some cheeky limits at these three levels. And my stop loss is going to be a weekly close underneath this fair value gap. Again, our theory is that a weekly fair value gap is a higher time frame bullish PD array. Currently, we're in a bull run, which means we're still in an uptrend. And if we were in an uptrend, it means that bullish PD arrays tend to get respected, especially the higher time frame ones. This one has yet to be filled. Like, price is deliberately forming a range just above the weekly fair value gap. Like, ideally, if we filled this like a couple months earlier or like even a month earlier, like Bitcoin would just continue to fly straight away. Like Bitcoin would probably be sitting at like 120,000 already at this point. But the fact that we formed this consolidation right before a major economic event, which is the inauguration, this only further signifies that, hey, we can start building a story. We can start painting a picture like, hey, this is probably looking like manipulation. And where is the manipulation going to end? Probably somewhere within the zone. And because this is my theory, my invalidation would be a weekly close below the fair value gap. Why? Because again, I'm believing that this PD array to be bullish. Because again, based on all of the factors that we've discussed so far, things are bullish. And if it's bullish, even if you were to go like below the fair value gap for a moment, that's fine because we still have another fair value gap right down here. As you can see on the weekly chart, this is not this is the first fair value gap essentially. We still have another one right below here. If price just dips into here, but then it starts giving like a V-shaped recovery or a V-shaped bounce coming out of the gap, leaving the gap, then hey, that's a good sign. But if price fills in the fair value gap and then it continues just staying around here and even starts going lower, especially if you get a weekly candle close underneath the fair value gap, that's not so much of a good signal. And once that happens, I'm happy to just call it quits, just admit that, hey, I was wrong. I took a calculated risk on this, playing something like this for, expected at least, about a 5 risk to reward ratio. And if I'm wrong, hey, I'm wrong. And that's fine. I just take a loss on the account and I'll move on. That's the life of a trader. Now, of course, the way that you're going to pair this with your altcoins is to find a similar entry on your altcoins for when Bitcoin does this move. Just be wary that with altcoins, they can be a lot more volatile than Bitcoin. Bitcoin going down from like 95K, like currently 93K to 85K is going to cause altcoins to just drop by like 30-40%. And as long as you keep that in mind, that there's going to be more volatility and that you're very likely not going to be perfect on if you do set like cheeky limits. And you just also need to be comfortable with holding true those cheeky limits for a short period of red. And as long as you're fine with that, then go ahead and apply this to altcoins. But ideally, with altcoins, I'm going to want to see the criteria for my 3x entry model to be fulfilled before I get into them for a guaranteed 3 to 5x. I'm actually going to be covering this entry model in a masterclass that's coming up in 3 days. This is just going to be a really valuable masterclass looking to set you up for the rest of 2025. So if this is something that might be relevant to you, make sure you click the link down below because we are going to be starting soon. Anyways, if you enjoyed this video, drop a like down below because it truly does help me keep making more of these analyses for you. But otherwise, guys, I'm going to see you in the masterclass. Bye-bye.